Hey guys, welcome back again for another episode of the Bitcoin News Show. As always, I'm your host Vortex. We've been away for a few weeks here. Actually, we try to do it every other Monday, but the last Monday got caught up with family stuff. So now we're actually coming back 1 week after that instead of waiting a whole another 2 weeks. That's just too long to wait to talk Bitcoin. So we're actually coming back this night here, Monday, 8 p.m. Pacific. Is when we like to go live, so you guys can join us now or every other Monday, or we also upload to the World Crypto Network YouTube channel, so you can always catch us there. Tonight, I have a couple of guests here. I got my friend Jose Perez. He hasn't been with us for a while, so I decided to join in and say hi. And then joining us back again, we got Gabriel Divine.
Thanks for having me.
Yeah, always great to have you, Gabriel. Always a pleasure, man. Really enjoy your commentary on the Bitcoin group and the show as well. So you need to just be in as many shows as you can, man. You can get more crypto shows.
The Bitcoin News Show, the American, the Californian original. No, wait, actually, you're in Vegas. West Coast original.
That's true. We're in Vegas is how we do. So
nationwide, west to east, man, east to
That's
west.
Right. The West Side original.
Exactly. Yeah, we got me all the way on the West Coast. Then we got Jose all the way on the East Coast, and then Gabriel is in between. Where are you again, Gabriel?
Hollywood,
yeah, California, West Coast.
Actually,
So
more west than you are.
More west than I am. I'm only in Vegas, so very cool. So thanks again, guys, so much for joining us. We got a lot to talk about this actual show, and I don't want to really talk about Craig Wright too much, but I do have to at least address it for a quick minute here because it actually happened while I didn't get a chance to really comment it on the show yet. So basically, I'm sure most of you know, but there was a gentleman by the name of Craig Wright who announced that he was Satoshi Nakamoto on a Monday, and then Thursday he left. Of that same week. So Monday he came in, said he was going to move some coins, move the original coins, and by Thursday he was gone. His website was down, and he said goodbye to the world. So there's all sorts of stuff you can read about it to death now. But just really quick, I never for once thought this guy was going to be Satoshi because of his past, of the things that I've heard other people, basically of the talks that I've heard him live and of what other people have said of him live, and you can just research the history of this guy, just all sorts of shadiness. I think that a lot of people shared my opinion as well on this, especially when the guy started saying that he was going to move coins, eventually move the original coins, and never did. So just quickly, Gabriel, I know you spoke about this before on the Bitcoin group, but just quickly, what did you think about this whole fiasco, and are we better off now that he's gone?
Anything entertaining is always fun. We're probably better off that he's gone, but it's fun. Whenever people come forward with their bullshit, it's always interesting. And in this case, it was interesting because on the surface, there's no reason to claim something and claim you're going to provide proof and then change your mind later. That is, on the surface, there's no reason. In other words, none of us really know this story. None of us here. Somebody in the world does. Craig Wright knows why. But there is obviously an ulterior motive. And that's actually the interesting thing in this case. Not the whole story of him claiming he was something that's easily provable, or not provable, but it's easy to provide very good evidence for it. There's no way to completely prove you're somebody that did something digitally. But all you have to do is do that digitally to make it basically a foregone conclusion. And he totally did not do that. So, okay, to say that this technology or to this engineering or computer science professor and sort of failed entrepreneur or whatever he is would have done it just for attention, not really believable. So there's some ulterior motive floating out there that the three of us have no idea about. All these millions of people in the world that care about this technology and are possibly interested, maybe not less or more interested in the pseudonymous creator, are totally in the dark. We have no idea about why somebody would do that. It's totally weird. And so on the Bitcoin group, I actually outlined my 3 most likely theories that I could come up with for that ulterior motive. Number 1, that there's some evidence to suggest that he owes a lot of taxes as a result of a deal gone bad regarding a business investment in the past, where he's trying to get out of paying some taxes, and he needed to prove that he had some reserves without having to actually pay anything. So there's some sort of scheme, perhaps, where he was trying to outwit the tax authorities in Australia and naively thought that he could trick some quote-unquote respected people in the community, although by now their reputations are severely tarnished. Even before this, they were pretty tarnished, especially Gavin Andresen. So that's one theory, that he was trying to outwit or trick some tax authorities or do some sort of business entrepreneurship Band-Aid with this sort of thing, and was just going out on a limb because he's desperate. That would be this ulterior motive, is that he's just desperate, and he was just trying to scam and trick some guys in order to trick the authorities. It was his only chance. It was a total long shot. It completely failed, if that's the case. So that's one ulterior motive. Another one would be a genuine scam where he convinced some large coin holders, possibly Gavin Andresen. John Matonis certainly has some sort of stock, probably in the thousands, I would assume, laid away that he's used for investment in the past. And he tricked them using a fake Victor. This is true for sure. He definitely tricked Andresen and probably Ian Grigg and John Matonis. Ian Grigg, a cryptographic researcher who now works for R3. So he definitely tricked them. It might have had what was public was that he got these guys to send £5 worth of Bitcoin, British pounds worth of, tiny bit of Bitcoin, just to say, okay, now I'm going to send it back, I promise, or whatever. He definitely scammed them out of £10, but he might have scammed them out of hundreds of thousands or millions of pounds as a part of this thing. So in that case, he might have succeeded, getting them to send. Perhaps he did have control over Block 9 or something, and now he's like just sitting on the Bitcoin that they sold him, and he's planning to spend it later or something. This could have been a big scam effort where he did the big PR. He obviously hired a PR company. Apparently, he hired this David Bowie's old PR company. They did a great job getting the message out.
And see, that's what's really strange to me, is that this guy hired a PR company, went around to all of the biggest publications, and essentially gave a story to the highest bidder. And that, to me, that was the big thing. That was literally the hugest flag that I could ever that ever came to me, is what the hell would Satoshi Nakamoto need to do why would he need to be shopping around his story to the news publications?
Right.
Absolutely ridiculous. Like, Satoshi clearly did not make Bitcoin to make money. Like,
Right.
Obviously it was worthless when it first started, and that was the goal. And then he bounced before it was even worth anything. So it just totally sent up a red flag to me that he would literally shop around, and that was the number one excuse that I used on the forums and on CoinDesk and things like that, to say that, look, there's no way Satoshi would have ever shopped around for the highest bidder.
Well, to be fair, if, for example, just going out hypothetically speaking, Craig Wright is Satoshi Nakamoto, or say Craig Wright and his old buddy Dave Kleiman, which is what he claims, I believe. He might have another scheme. He might have been doing a scam as well. Or maybe Dave died with half of the key and they split up, with a Shamir secret, whatever, and they're split up the key, and he has his bit, and now the team that created Bitcoin can no longer move the Genesis coin. So, certainly hiring a PR team is evidence for an ulterior motive.
Yes.
My third theory was that, to repeat what I just said, Craig Wright really is part of the genuine Satoshi Nakamoto team, and he wants to deflect attention by making himself seem like a fraud. So that would be a legitimate ulterior motive, a believable ulterior motive.
I kind of fall in that last one, but it's not necessarily that he's trying to make him they take away of attention. I think more of he might have been involved and he may have not actually met the real Satoshi or whatever, but he feels like he had a lot to do with it, and maybe he, for whatever reasons, didn't keep all his Bitcoin or never made as many Bitcoin or, and he feels like he missed the boat, missed out, but he likes the publicity. He likes the fame. So he's playing that card, I mean, he's kind of like,
it's awfully risky though, Jose. I mean, to garner that attention, that means you might have mafia people showing up at your doorstep and
but he's already doing it though. But he is doing it. Like, I mean, he's gotten all this attention. I mean, he's practically saying that he is Satoshi. You know what I'm saying?
He did.
There's no benefit to that.
He was.
But there's no benefit to that attention.
Yeah.
If you don't control, even if you do control the coins, there's no benefit to that attention.
There's book possibility. He could write a book. He could make a ton of money like that.
Yeah.
There's all kinds of ways to do it. I mean, he's obviously doing it to the publicity angle where he's like charging. Essentially, he could appear on a ton of shows and make a ton of money.
See, like personally,
I'm a speaker, get paid hundreds of thousands of dollars to speak at whatever.
Yes, but remember the last chapter of the saga is he left the public eye and said, "I can't."
Before you could ever do that.
Not taking any. So I mean, maybe he's signed a secret book contract. Okay.
Yeah, but like I'm saying, but it's like a partial truth. So he might have been involved, but not to the degree that he claims. And he might have been burnt, and he feels like this is a way for him to get the recognition that he always thought he might have deserved, but really doesn't.
But it backfired, so that didn't actually work.
Yeah. Right. Well, I'm saying, like, it's not to say that it actually worked or not, but he tried. Because either way, whatever his plan was, I mean, most of it is failure, I believe, at this point, right? Like, it's not he's not really seen as a success either way. So whichever one of those things he falls in, it's not. I would say is really that successful in any of them.
No. But if it was a secret scam where we don't know how much he scammed John Matonis, maybe he scammed John Matonis out of 8,000 Bitcoin.
Because the first one doesn't make sense to me because it's like, wouldn't you want to show that you have no money? Because technically, then you can be taxed on whatever money you do have. So why would you want to show that you have a lot more wealth than you do?
Right. You know yeah, that's strange. It's a little bit of a fuzzy one. I'll admit that for sure.
So I feel
very
like
strange, very strange.
Because like if you saw him like before this happened, like he had already been rumored by the media as one of the people that could be Satoshi or whatever, and like there was like some interview where he was at where he was like on the board of it, and one of the people pressed him was like, "Oh, so what do you do for what's your involvement been with Bitcoin?" And then he kind of has like a smirk on his face, like he's trying to hold back. I think maybe he was playing that whole thing even back then, like starting to play on it.
Of course,
some kind of mystery. And then he says his involvement, but he doesn't quite say that he's Satoshi or whatever. But he was like, what is he hiding? Maybe he really has been involved for a long time. But like I said, not to the extent. And then maybe he thought maybe he could really benefit, like make some sort of plan. Like he said, he might be kind of desperate now. He needs money.
I think we beat the subject to death, but very, very, very interesting propositions, Jose, for sure. And I think that we could literally sit here all night, and just come up with theories because it's seriously so crazy. I mean, yeah, it's just so crazy, man. So thanks, guys. Thanks, guys, for weighing in. Because obviously we don't know for sure, and we're just speculating. But it's just awfully strange, and it's just way too interesting not to speculate a little bit on it. So I just thought we should go over that, real quick and check it out. So very cool. Just definitely strange. The guy came in on Monday and is out by Thursday. So that was that. We are now waiting for the next Satoshi Nakamoto to pop his head and claim the million Bitcoin. We'll see what happens. We've been getting one every year, but yeah, as Coinable says in the chat room, I think Dorian was my favorite Satoshi so far. So let's see what happens. We'll move on to the next subject here, next topic. Before we do that, I'd just like to ask everybody to go ahead and tweet out and Facebook out the show. Let everybody know we're here talking Bitcoin, and if everybody wants to come in and join, we're more happy to welcome you into the show, into the chat. You can join in anytime you want. Of course, there's a few rules. We don't want scammers or inappropriate behavior or anything like that. We just had somebody try to join in who was an MLM person and tried to. His profile clearly says that he just made $500,000 and he's an MLM guy. So I'm like, sorry, I don't think I want to hear what you have to say about Bitcoin. Being an MLM person, but we're going to move on to the next subject here, and this one's going to be kind of brief as well. I just wanted to kind of get this out there, and basically that is, it looks like the R3 the big, huge blockchain consortium that had over 40 banks underneath their belt now, is now seeking funding. And they're, of course, seeking funding in the absorbent, crazy amounts that only banks can. And so I think they're seeking $200 million in funding right now. And they've already got, huge amounts of funding, but now they're seeking more because they're running out of money. Now, before I go to the panelists, I just want to give my quick opinion on this, because this is kind of crazy. Like, first of all, I'm just so happy to see like these people fumbling in, we knew they would, right? We knew R3, a centralized entity full of banks that don't trust each other, was probably going to screw up, right? When they try to compete with Bitcoin, but it's clearly happening now. They're not going to. They don't have any finished product. The only thing that we have is a few news articles of them successfully completing some transactions with some banks. Nothing concrete, and now they're already seeking $200 million more in funding. And so I just actually just love it. Can't laugh harder at this particular situation. I find it absolutely hilarious, because this is again similar to what happened with TCP/IP in the early days when the telephone companies tried to come together and create a protocol to compete with the open source protocol of TCP or IP. And so I would like to hear Gabriel's opinions on this first. And let me just ask you, Gabriel, what do you think? What do you make of these guys seeking more funding? And do you think that it's going to pay off for them?
It's once again, we're really guessing here. We are not privy to those board meetings. We're not privy to what Ian Grigg and Mike Hearn and who else is working over there? Do you remember who else is there?
Mike Hearn was the only big one.
Yeah, and Ian Grigg is a big name in financial cryptography. He's been involved in the space for 15 years. Not really sure how his game theory and economics understanding is, because he certainly wasn't, on the Bitcoin bandwagon early. But it's difficult to say what they're doing. I think this is basically a big play to make a bunch of cash from the banks, and if something comes of it, great. If not, great, cool. The R3 people are just going to try to milk the cow for as long as the blockchain idea is hip. Eventually that bubble's going to bust, and they'll either come out with it with a working product that's of use to banks or not. It's really hard to say. I'm very doubtful. I'm very doubtful that the security can work. In competition with an open network, closed networks have a very high bar to reach. If you've got a certain amount of capital contained in a closed system, which is not anti-fragile. In other words, it's not constantly under attack, like Bitcoin or the internet. These were systems that were constantly being bombarded, especially Bitcoin, constantly bombarded. There's a $7 billion, pot of gold at the end of that rainbow. I mean, not literally, but you'll at least be able to steal millions, or even if you do break it, you'll be able to slowly trickle it out. The problem is that people will notice quickly that their Bitcoin is being stolen. So you've got this reward, and you've got hackers trying to break it. And it's to the point now where it's been 7 years, and there ain't no hacker going to break the basic system of Bitcoin. It's too strong. And now also hackers they also have no, other than that straight money, they don't want to break Bitcoin because Bitcoin enables hacking. It's the currency of the internet, and it enables all the things that, say, for example, black hats want to do with their lives. They want to extort people anonymously, things like that. So Bitcoin is extremely anti-fragile. Every time you attack it, it has gotten stronger and more robust, and now it's getting attacked by being too successful. And it's transcending that by increasing its throughput. So R3 is doing the blockchain idea, and these are private virtual, Ethereum. It's an Ethereum. So they basically will ping it to Ethereum in order to secure it, which is cool. That's smart. But for the actual transfers of the in-network value, you're going to have massive hacking attacks, just like the banks are getting attacked now with their private databases. They're very vulnerable. Private databases are fragile.
Swift just got hacked.
Yeah, again, second time this year, I believe, that we know about. It's probably been more like 10. Billions of dollars are being hacked out of a year from banks, and that's just getting more. That's getting greatly more, and that's obviously going to grow in the future. So this is just another type of private network. In fact, it's actually bigger, and it might be harder to detect a problem because there are multiple competing parties. So these banks compete with each other. They're collaborating on this project, but they compete with each other in general. So it's not necessarily in one node's interest to report a security issue on another node.
Exactly, and that's why I find it so strange that people think that these banks are going to collaborate with each other. I mean, they are literally, competitors. And yes, technically, they're only competitors on the outside. Obviously, they all collude behind the scenes to fix interest rates and different things like that. But at the end of the day, they're still competing with each other. Like, they still don't trust each other. Absolutely not. They do. There is zero trust in between the banks, around the world. And so it just baffles me that they think that they'll be able to use a private blockchain to increase their trust.
Yeah, the trust thing is interesting because basically they are, instead of not having any trust at all and outsourcing their trust to third parties that they both have to trust in, that are then getting hacked and fucking them over. And the banks don't like that. They're losing money every year because of that. They are now trusting the IT security. They're trusting the cybersecurity, how hardened the other nodes are. They're trusting their IT departments, and they're trusting big companies like Symantec that they contract out. There is no such thing as perfect cybersecurity. There is no such thing as network security that's unbreakable. And it doesn't even need to be close to unbreakable. It doesn't even need to be, it needs to be really strong. And that's going to be so expensive. So now you're basically just in-housing the trust that you were outsourcing before. It still might be a savings, though. So this could still be a viable product. That's what I was getting at the beginning when you asked me. The price for outsourcing the trust to your IT department and to and everybody sort of trusting their own things so that they're hardening their cybersecurity, that still might be cheaper than the current paradigm of third parties galore and just getting hacked left and right. It still might be cut out some costs from interbank transfers. It's not really going to affect anybody's lives, though.
Exactly. So again, it's going to improve trust only slightly for them. And when you compare it to the open trust network, it's worthless. Like, who are you going to trust? Are you going to trust this open network that's been a sewer rat, been completely hit from every single freaking thing, every single attack vector known to man for the last 7 or 8 years? Or are you going to trust a private bank network?
Side note, I was just listening to Andreas before this. He's the best at coming up with analogies, and sewer rat is a great one.
It's awesome. So, Jose, let me ask you on this. Do you have anything to say on R3 seeking funding and $200 million more funding?
It is what it is. That's not like out of the norm in general for a startup, especially one that it's trying to tackle the financial system with banking. It's like 200 million is like chump change, for that sector specifically. And like, Gabriel was saying, I pretty much fall in line with what he was saying. You don't know what's really going on. But if anything, I don't really see it too much as a negative per se, because it's like, the more money that goes into cryptocurrency, I think overall just gives more validity to the concept. Obviously, we are rooting for the open framework, but I don't see it as a big deal. I say whatever, do your thing. There's plenty of space, in the market, and they're gonna, because theoretically speaking, the money they spend on it, could theoretically lead to some sort of innovation that could theoretically spread one way or another.
I guess like Gabriel, I'm with Gabriel when is saying like you said, it's going to lead to a couple of little things, for sure. But I don't believe that it's going to lead to anything innovative, anything that anybody else can take advantage of other than huge central banks.
Yeah, but you have employees that get paid and they learn more about cryptocurrencies, cryptography, and those people go out and start their own businesses, and they may get scooped up by other people, So overall, I don't really see it as a wholly negative thing.
I guess it continues to bring legitimacy to the blockchain space, and it continues to bring in more people into the space, I guess, in general. So.
Yeah, because it's that kind of thing gets attention from like the normal folks who, they're like, because every time I see somebody on some article like, I thought Bitcoin was dead. I thought Bitcoin died, a few years ago, and it's like they're still hearing about it. It hasn't died, and then like tons of this money is going to essentially, the same kind of technology. So it just helps propagate the lifespan of Bitcoin, because you always got to have, like, you have a hero and then you have a villain, right?
Yeah. I guess you got to have a hero and a villain, and blockchain is the villain. So that's cool. We got to have something to root for. So very cool.
Competition, man.
Thank you, Jose. Right. We're gonna move on to the next topic. Right before we do, just ask that everybody could tweet out and share out, Facebook out, that we're watching that we're talking Bitcoin here on the Bitcoin News Show. Again, we're here every other Monday at 8 p.m. Pacific, and welcome anybody to join in the chat, join in the show. We love to talk to Bitcoin to new people, to introduce to them Bitcoin, as well as talk to enthusiasts about more of the technical details as well. So we're about to start the next topic. So let's start the next topic. That's going to be pretty cool stuff. Basically, it looks like this particular article is actually already old, because it's kind of crazy. This article says that the DAO just raised $50 million, but it's already old. We're now already over $100 million into the DAO, autonomous crypto funding project, as well as I think we might be at 125 million by now. Seriously, and by the time you guys see this, who knows? God only knows how much money is going to be invested in it. It's already become the most successful crowdfunding project of all time in history of man, and so I think that this is going to be absolutely huge. And I'd like to get Gabriel's take on this first. So let me ask you, Gabriel, what is the DAO, and why do you think it's attracting this much money into
it? It's very challenging to define the DAO or the DAO.
Let's just call it the DAO.
Not to be confused with the Dow, Dow Jones Industrial Average,
or the Chinese DAO.
Right, exactly. Their website is, from what I've heard, very poorly written. I think they weren't expecting as much attention as they got. It's very complex, very abstruse. So first of all, the details don't sound that well defined so far, I think. But in any case, the DAO is named for the general technology that has, just only existed for a short time, a couple of years, maybe 3 4 years, and just abstractly with white papers, the distributed autonomous organization. And this is a wonderful, incredible concept that could conceivably impact society in the most widespread, deep way you could imagine. It's absolutely stunning, the actual potential of distributed autonomous organizations and as a general technological construct. What they are is a code-based company. So it's a company that does not rely on a centralized authority, such as the government, to issue it a license to operate. Instead, all of the it's completely voluntary. People invest in a distributed autonomous organization with cryptocurrency, and the entire company is built on open source smart contract code. And however the company is run, it's all completely open source, and you can utilize all the advantages of the cryptocurrency in the structure of your distributed autonomous organization. There's no central authority. There's no CEO. It's distributed. So it's autonomous in the sense that the decisions are made by code or by, for example, voting. In the case of the DAO that they've created here, it has voting paradigm built in, and then of course it's an organization. So the DAO is definitely the first large-scale attempt at making a distributed autonomous organization. It's built on the Ethereum blockchain, which is a smart contract integrated blockchain with a very short block time and a different a different issuance model from Bitcoin, but otherwise relatively similar. It has very quick blocks, which is supposedly good for smart contracts that have a short time frame to them. This distributed autonomous organization is essentially a distributed venture capital company. So it's basically it's a DAO that is meant to emulate. Like, you could make a DAO that's Dropbox. That's kind of what MadeSafe is, really. It's a MadeSafe project is an attempt to have it's an encrypted layer on the internet that basically uses storage as its scarce asset. And it's basically a distributed autonomous organization that builds an encrypted layer on top of the internet. That's not complete yet. Whereas this DAO is a venture capital. It's a bootstrapping DAO in the sense that it is meant to fund various projects, including other DAOs, but also other types of projects. And the first two projects that have been proposed, that of course nothing has been funded yet. This is just bootstrapping VC DAO, basically. Are Slock.it and something else. I'm trying to remember what it is. And Slock.it is a Internet of Things idea, and then there's the other one. I can't quite recall. Maybe you guys can chime in with that.
There was like a one to create some kind of car.
An autonomous car DAO, basically. Yeah, it's basically to create a decentralized Uber, sort of. Yeah. Maybe. Or possibly with autonomous cars. So instead of with drivers, which is like Uber, then basically the DAO would, let's say they vote. So basically the way that this VC company works, just like a small VC company, say in Silicon Valley, there's a board of 9 people, and they vote on which projects to fund. The DAO now has this pool of ether that they're going to vote on which projects to fund, which is, it's very cool. So, if they vote to fund Motoric, this autonomous car, maybe they'll vote to spend $12 million to buy a fleet of Teslas or something in, say, Paris and Montreal or whatever, and just as first phase, and that company will literally go and buy those things. So that's the basic concept. I have not invested in the Ether space, in Ethereum at all, because it's difficult for me to nail down the technological advantages of Ethereum. And I've been doing some research on that today, actually, some more research, and certainly definitely getting some interesting fuzzy answers, that it's less about the raw technology and more about the community and the governance model and sort of the confidence that they've inspired in people through the public figures. So that's cool. That those are very important human elements as well. They weren't enough to convince me. And in addition, I specifically would not have invested in the DAO because I believe voting is inefficient. So while it is totally fair, in the DAO, basically depends on how many tokens you hold, whatever percentage you hold of the company. Just like in a corporation, you vote on the shareholders vote on a very few things, just a couple of things in a company, because it's too inefficient. But in the age of digital DAOs, in an age of the internet, it is actually plenty efficient. So everyone can be relatively well informed on what to vote on. But then you're still at the mercy of the majority when you are, when you take part in a voting scheme. So I would want to stay far away from that. I'm much more of a fan of decentralized crowdfunding, right? So where I'd much rather be able to just invest in Slock and not Motoric, and because then your funds that you have pledged to the DAO are getting pushed towards something that you don't like. And that's actually an important point. This is not an investment. So these $120 million cannot be compared to a traditional crowdfund where those people send that money and it is not refundable. As part of their, a Kickstarter and those older platforms, you can't get your money back. You've signed a contract that those guys get your cash and you fucking get whatever you get in return. You cannot pull it out. This is totally different. And that's one of the reasons I think why they got so much attention is because it's very low risk. You control the keys. You can take out your money at any time. So the size of the DAO will grow and shrink depending on the level of interest in it, which that's interesting. That's cool. It's not something I would want to do. I think it's not as efficient as just doing separate crowd funds, in my opinion. But they're trying to centralize it in an efficient way in order to make the vetting process easier for people. Because if every individual has to go in and it's a way to formalize the vetting process for new projects. Because in a VC company, they have to spend the money to do the due diligence to find out whether these people are legit, whether their idea is legit. In the case of the DAO, they vote on human beings that check the identities to make sure people are who they say they are. And then I'm assuming it's going to be, leveraging sort of the crowd to vet the human beings and the projects involved and the projects that are being proposed. So that's there's definitely some very obvious ways to game this system. It's quite risky in that way, I think. People could create a proposal and then, you do a bunch of votes, bribe people to vote. You could do 51% of tax, kind of like that. I have a feeling that those might not happen as much as some people think, but it's hard to tell.
But still, yeah. So let me ask you this then. What do you think are the main two reasons, like why this was so incredibly successful, being the absolute first one? Like how could this first one? I mean, me personally, that's why I'm not investing, because it's literally the first one. Which of course is different than Bitcoin, right? That's the first crypto, but this is much more complex than I think even Bitcoin is in the long run. Like, so, what do you think made this so successful? What do you think are the two main reasons that so much money was invested into this so quick in such a quick amount of time?
I already touched upon one of the reasons, which is that it's fully refundable. So it's not a crowd fund. It's just it's more like pledges at a pledge drive.
So that's one. What's another one?
Another one I think is the sudden rise in the speculative investment in the Ethereum token. So Ether's rise from less than a cent to $10, or it's about $8 now. I haven't looked at it.
Yeah. So a bunch of people holding Ethereum, then there's a bunch of Ethereum millionaires basically.
Yeah, there's a bunch of capital in these Ether.
Because they just raised so much, 10x or something.
Right, 100x or whatever. Yeah, so these people are sitting on 20, 30, 40 grand, and it's very smart to invest back in the ecosystem. That's what the Bitcoin millionaires did too. They funded the startups in the space.
So then let me ask you this: do you think this is going to be? Do you think that this is going to set off, because it was so successful? Do you think this is going to now unleash and set off just an exponential amount of DAOs and an exponential amount of investing in crypto? Is it going to take it from where we were yesterday or where we were the week before the DAO came out to just insane levels in a short amount of time?
I think that this is a very important signal, and it's an important key turn in perception, in public perception of public projects, of crowdfunding in general. And I really agree with David Orban, one of my favorite thinkers in the space. He's comes out of Singularity University, which is an interesting organization that it's a little strange at times, but he's a Hungarian-Italian guy, very strange accent. David Orban was interviewed in the Dow article that Bitcoin Magazine did. He had some very interesting things to say, and I really agree with him when he says that the highest crowdfund a year or two ago was 10 million. Now we're at 100 million, and I think that even though it's pledges, I think it's legitimate to say that. And he said, and he predicted in 2 to 3 years we're going to have our first $1 billion crowdfund. And that is very powerful. The type of transformation that our society can see from this, it'll rapidly decentralize
imagine somebody,
hierarchies.
It's just absolutely fascinating, like to get $1 billion. Because imagine now if we had a bunch of these, and now imagine if one of them was to clean up the earth, right? Like if it was autonomous, and it literally spent all the funds just to clean up, So that's fascinating. So Jose, oops, about my laptop. Jose, do you have some? Would you like to comment on here?
Well, I mean, they just have the right zing, the right amount of ingredients to make it pop. So like, it has a cool looking website. Yeah. It's a pretty cool notion, and then they're like, piggybacking on the success of Ether, kind of like what Gabriel was saying. And then like, it's funny because this it's kind of like a win-win for people who have Ether.
Yeah.
Because essentially, like, you're pumping up the Ether price by, getting into this DAO.
Sure.
And you could potentially, get even more money, essentially, make even more value for yourself, by just keep on contributing to this thing. Because like, I'm looking at it and like, they're not necessarily forcing you, but like, they're like all recommending you use Ether. So I got to go there and buy more Ether, and then I got to go send it in here, and then it's going to just start pumping up the price, and then other people are going to do it. And then possibly, like you were saying, other DAOs could theoretically form, and then, well, we're using Ether, let's jump on the Ether thing. And it's just like it's just like a stacking effect here, like you're saying.
They call it a virtuous circle or surge.
And I mean, I want to put money into it right now. I'm looking at it and I'm like, man, this is my next
Jose,
Ether project.
I know you got Ether, Jose. So let me ask you, as an Ether holder, would you invest in the DAO? And if so, would you invest a little, medium, or a lot?
So it's a little bit more complicated to invest because they want me to like, now I got to do a wallet. I got to do all this shit now instead of just transferring it over from an exchange. Would be much easier for me, but it has enough allure. And I'm like one of those guys who, the how do you say, FOMO. FOMO is strong with me, so the fear of missing out is worse for me than like losing money on putting something that doesn't go anywhere.
Exactly.
So I want to put some money in, man. I got 10 days to do so. I think I'm going to.
Cool.
And I get 100 of these DAO tokens for around 100 for every like 1 to 1.5 Ether I put in, apparently, from what I'm looking at this.
Yep.
Don't know what, I don't know what the plan is or like when the actual term.
Yeah. Well, basically, you can look on there, but I don't remember how long it is either. But basically, what happens is that every time the thing ends, like it says 10 hours, right, or something like that, it costs more Ether to buy tokens.
Right, but I mean, like how Ethereum was like a year or two before it actually became live or whatever, or before the token was available in exchanges and stuff. I haven't really read into this DAO. I just looking at through the website, what you guys sent me, but it looks pretty dope. I think I'm going to touch it. I mean, to me, it's like one of those things. It's like, obviously cryptocurrency is like it is the thing, right? It's going to be one of the biggest, creators of wealth, I believe, in the coming years, and it has already been, and it's like you can either, I'm young, right? You either invest in the stock market, which I do also, but more for more of a medium type risk. And so my high risk investing is more like in cryptocurrency. So it's like, whatever, man, I'll drop a few coins and then potentially make a whole ton more money and potentially even make a shit ton of more money in 10 to 20 years. You know what I'm saying? So it's worth to just throw a few Bitcoins at it and see what happens to me. So, because I have enough money to do that. It looks very interesting. And this is exactly the type of thing you look for as an investor to invest in. You know what I'm saying? Like anything that says, this is the biggest, fund or open, public funding thing ever yet. To me, signals, put my money in it. You know what I mean? So I'm going to check it out. I'm going to do it.
Cool, man.
I'm gonna drop some fucking coin on this shit, son.
Jose,
I make myself $1 million.
Jose, what is your level of technical sophistication?
I mean, it's pretty high. It's relative to a lot of people, to majority of people.
Can you explain to me what makes Ethereum, what the advantage of Ethereum is over side chains or counterparty plus Bitcoin? Is what makes Ethereum better, other than say like the block time?
The only thing I really know about Ethereum that makes it different to me than like Bitcoin or whatever is like the integrated like framework for programming shit in it.
Right. Well, what's the advantage of that integrated framework? Yeah.
I don't know. It's fucking
That's what
cool.
I get a lot. I get that a lot. To
me, it's like To me, it's more of like, obviously, cryptocurrency in general, from a technical perspective, is more advanced than, even my level, right? Like I'm pretty tech savvy, I know how to program in a few different languages and stuff, and I build computers from scratch. Your typical type of, scripter person and whatnot. But cryptocurrency is like on a different kind of level. But I kind of understand. I see it from like a larger perspective, and obviously it's going to be something that's going to be here forever. It's the next evolution in the finance realm, in the money realm, capital realm, and on top of other things that it can potentially be or whatever.
Right.
But Ethereum to me, really, it's just a matter that I happen to put 2 BTC in it, and now it's fucking huge, and I love it.
Yeah,
so that's basically. I made a ton of money off of it, and I think people like it. A lot of people are adopting it more than anything else. So that's the allure that it brings to me.
That's cool.
You know what I'm saying? So it's not like I don't necessarily see it as so much more advantage than Bitcoin. But the thing is that it doesn't matter. That theoretically doesn't matter. What matters is it's as good as Bitcoin, right? Maybe a little better, and it's becoming very popular.
Well, so, it's different than Bitcoin, but yeah.
But I'm saying like it's all about really publicity, right? Because the more people that use it, the more value is going to hold, and
But it doesn't matter use it unless it has value. That's the trick, right? People
give value though, like the people who people have to use it. You know what I'm saying? The more people that use it, it gives it more value, because obviously you could have the most fucking amazing cryptocurrency idea, concept, coin, whatever the hell it is in the world, and if nobody fucking uses it, it's worthless. You know what I'm saying?
Right. But in theory, if it was the best, it would probably be used. But I guess
maybe.
I guess chicken and egg. So let me ask Omar, who just joined us in. How you doing, Omar?
Yeah, excellent. Thank you.
You have something to say on this?
Yeah, I'm a newbie, as you know. I bought the Ethereum at 230, and
nice.
And that weekend it just went to the moon.
Yeah.
So after that I lost my mind. Now last week or two, I was hearing you guys really dogged out Ethereum. I'm an Ethereumist now. You know what I'm saying? And Gabriel, you really was nice this time when you spoke of it. I heard like a little respect. You know what I'm saying? I appreciate it. And so I took my Bitcoin, I bought the Ethereum, and I made money. And now I took my Ethereum and I went to the DAO, and that's where I'm at. Yeah, cool, man, cool. And I'm loving it.
I would like to say real quick. So, we were definitely, and I think we continue to possibly underestimate Ethereum. But the thing is that again, Gabriel and I, and many others just aren't convinced that it's that much better than Bitcoin. Right? We understand that it's a different coin. We understand that it has awesome use, and we understand that the idea is really cool. For sure, and it could very well maybe become as big as Bitcoin one day. I just am not sold on its long term.
It's about branding, bro.
You know, I'm just not sold on the long term.
Everyone knows Google Android is more powerful than Apple, right? But people love the branding of Apple, man.
Well, hold on.
You can do more with Android, but Apple is just so beautiful and easy to use. And
now we can't really compare phones to cryptocurrencies. Now
I don't know. I think we can. I mean, look at the charts. Apple's iPhones have been going down. Android took over the market.
Well, go ahead, Omar.
Okay, so like now that Ethereum has a purpose, because I can go along with, not having a store value or not having a purpose, or it's just being how did you term it? A high school project, that got out of control. Now that it has a purpose, such as Socket or, and all these other contractual coming up, I mean, that's what it's for. It's doing what it do now. With Socket, that would make it legit. Yes, I agree that Ethereum on its own is nothing, but now with a purpose, with the blockchain, I can see cars being driven carless now. I can see this going a long ways. I can see all apartment buildings, government banks, and whatever using the Ethereum blockchain for that, which gives Ethereum a purpose now. And again, look at again now, what happened with my Ethereum, it's like I shot up to like 24 microbits, and then it shot down. I was like, it can't go down. Man, that shit went down to 16. So I lost 2 Bitcoins there, right? And and now it's back up only because of the DAO. Only because now it's a purpose, and who knows where it's going to go now, Sure. Right. And another thing about the DAO is that I can get my money back, or I can get my Bitcoins back, and so that's a good thing.
Exactly. And Gabriel
I can get my Ethereum's back.
For sure. And Gabriel was saying that earlier, that's just a huge advantage to the DAO. And I think, and Gabriel thinks too, I think that's part of the reason why it got to be so big, so quick, because the risk was so low.
Yeah. No, it's one thing.
I wouldn't be surprised if this investment or sort of pledge level, because I just looked on the site and it's 120 million right now, and it doesn't end until May 28th. So I wouldn't be surprised if it doubles.
500. We're gonna go 500 million. I'm saying it right now. 500 million. Now Omar's making me want to go back and buy some more Ethereum.
Man, you gotta get in. Yes, go all the way. It's going to the moon.
I did the original public offering. So I put actually wanted to put 2 Bitcoin in, but for whatever reason, I couldn't get 0.4 of those Bitcoins out of one of the exchange. I was in this real shady exchange I couldn't get it out of. So I ended up doing 1.6 Bitcoin. When Ethereum was at 0.03 something or other, I had like close to 40 BTC worth of of value there. I mean, it went down to like 25, and then when it hit like 19 or 20, I ended up selling half of it, so I got 10 Bitcoin worth. Wow. And then I took that money and I invested it in a project of a buddy of mine's. He's releasing an app. But anyways,
cool.
Now I'm looking at this freaking DAO thing, and I'm glad I came on today's show because I really haven't been paying attention to crypto in a while. So it's good that I know about this because this to me sounds like the next, potential big one.
I definitely think that there's just going to be a ton of DAOs, and whether they're funded by Ether or Bitcoin, the sky's the limit. So, very cool.
One last thing to Gabriel's defense. On the last show I was in actually. You guys are talking about Ethereum, and you thought if you think the dogging was bad, I don't know how the last one was, but this was kind of earlier on, and Vortex and 2 other guys that were hating on Ethereum. They're like, oh, it's gonna, it's not gonna get to, I think one of the quotes, although actually one of the guys was like, oh, it might get to 40 like LTC did, but it hasn't even touched that. But anyways, and Gabriel was the one person who really wasn't too against Ethereum, and I still think he's pretty positive in comparison to a lot of people out there who are big time, Bitcoin gurus and fanboys. So,
very cool.
Give a little shout out there to my man Gabriel over there for keeping
the
Ethereum
Bitcoin
real.
maximalist.
Thanks, Jose.
And again, I don't really think, that we're, and some people have been called this before. I don't really think we're Bitcoin maximalists. We're just more like realists, because we've been in the game so long. We've seen so many altcoins. We were back in the days when there was literally a new altcoin every single day, and there was a whole forum post about it, and there was a whole image, like logos, and these people had like wallets, and it was all talking about it, and they all died. I mean, every last one of them. There's literally only now, as if you look at the top cryptocurrencies, there's really only 10 that matter, these days. But there was just a new one launched every day, and so we're still kind of in that phase where there's all these altcoins launching and such. But now we're getting to the phase where they're really maturing. Like Ethereum is now maturing, and Bitcoin's already matured and it continues to mature, but Ethereum now is maturing. And then maybe Dash will be next, and who knows? And so I definitely think there's room for all cryptocurrencies, and that's great. But I still think to this day that we need some kind of digital gold that backs up all the rest of the cryptocurrencies. And I think that currency, that particular use case scenario is going to be fulfilled by Bitcoin simply because it was the first.
I don't think anybody thinks. I don't think Ethereum or Ether supporters think that Bitcoin is going to disappear or anything like that.
But they do. A lot of them do think that it'll Bitcoin, and that's fine, and that's because they're new to the game, and that's great. And
I just feel like it's there is plenty of market. There's plenty of room for Ethereum and Bitcoin to both coexist and do their thing. You know what I'm saying?
Exactly.
Because you do need really need two different. In reality, I think you need at least two different cryptocurrencies that you can move from. Because otherwise, how are you you're not going to be moving from. It's a lot easier to move from Bitcoin to Ether and back than having to go from Ether to the fiat currency. You know what I'm saying?
Exactly.
USD or ruble.
As a bridge.
As a bridge. So I think it works well in twos. Maybe it's space for a three.
Yeah, well, I mean, I had a shower thought, literally today, and I was thinking, Bitcoin is the gold, backing currency, and Ether has no limit. It doesn't have a decreasing. Its supply is determined by the mining purely. It has no decreasing block reward or anything like that, and it's possibly going to go to proof of stake. And so, in that sense, it's much more like paper currency.
Yeah.
So I mean, hey,
and that has a use.
Paper.
Yeah, and that has a use.
Right.
So,
hey, let me ask Gabriel a quick question before I jump off. Yeah, have you heard of Digits and Open Ledger yet? Do you know anything about Digits, which is part of the DAO? Digits, which is the gold-based currency. I mean, the gold Digits.
Oh, no, gold. Is it a gold-backed crypto?
Yeah, Yeah, I can't explain it. It's part of the DAO, and it's a gold. Digits is spelled. I can get your information on that.
Yeah, if you want to paste the link in the chat.
Paste me a link.
Yeah, I would like to have your expert opinion on that. Okay, great. Thanks a lot. Or have you heard of Open Ledger, the decentralized exchange? Have you heard of that? You know anything about that?
Yes, I have heard of Open Ledger. I can't recall any details offhand, though.
Okay.
It's a decentralized crypto exchange.
Yes, right.
Is that right?
Yes.
That's cool. Yeah, I have heard of that, and I have great hopes. I mean, we just like Open Bazaar is decentralizing the marketplaces like eBay and things like Alibaba or whatever they are, and Amazon. I definitely think that exchanges should be decentralized as well. Certainly for crypto. Because of the gatekeeping and everything on fiat, that might be technically impossible. But certainly for crypto, we need to have a decentralized way to track that. And I think that's inevitable. And is that kind of what Open Ledger is? Is it a crypto?
Yes, absolutely. Yes, it's saying it's the first. It is the first. It's part of BitShares. BitShares is using the same platform. It's from CCDEK from Denmark. Ronnie Boschner. So he's been around for a while, and he's doing it. But I like to drop that in the chat area, and you guys take a look at it and tell me what you think.
Yeah.
Okay.
Yeah, let's check out that link right now.
All righty, appreciate it.
But as far as if you're genuinely talking about actual physical gold being held somewhere and you're buying a share in it, be extremely careful and cautious with that scheme because it's highly fragile, highly gameable. Placing crypto on top of physical assets always introduces trust and always introduces lots and lots of risk that you totally don't have when you're holding a physical coin or holding your private keys for a crypto. That's a very risky endeavor. I would personally not go near. I wouldn't go near any metal holding scheme with a 10 megabit pull.
For sure. And I agree with that. Like I'm going to agree with Grable. We can't stress it enough. When you start layering physical assets over crypto, like you just start going backwards, in my opinion. I'm sure in the future it will be done, correctly once the whole system is flipped, once we're all on crypto, once everything is verifiable, once everything is auditable, in real time across the board. That's different. That's a different story. That'd be great. But until then, like, be very, very, very careful. Me personally, I'm only investing in crypto assets. I'm not investing in anything to do with physical or physical over the top of crypto. So it's definitely, like Gabriel says, introduces trust. So, there was also another decentralized exchange that launched too, Bitsquare.io, just recently launched. So I thought that was cool. Let's bring that up real quick because that's one of the first decentralized exchanges too, and that's open source, and that thing is pretty cool. Obviously, like 0 to no liquidity right now, but still awesome because it fully works. Like it literally fully works. You can even do USD. Use I think they use color coins to represent fiat currencies. So it's really cool. So I recommend that as well.
Yeah, looking at this link, I'm seeing something to do with gold. So basically, it'll allow people, allow you to of course trade digitally tiny fractions of gold, and really that is no more secure than trading GLD on an exchange. You've got these ETFs holding, fractional reserve style funds that have supposedly are, tracking their gold, but it's a centralized place where government agents or mafias or criminals can come in with guns and steal that out, and then your token, your crypto token that supposedly, entitles you to metal somewhere is then worthless because the backing has been dropped out. Remember, people, backing is a weakness.
Yes. Very cool. Thank you, Gabriel. Jose, you got anything to say?
I think like the whole gold thing is just like a last ditch effort to, people who just can't move forward and want to feel like they still have some sense of of what they know, something to latch onto from the past that it's traditional, because it's like, dude, information is king, man. Everything is going to be information. Everything's information. The value is all in the information.
Right.
You know what I'm saying? We need to get past this whole thing of trying to attach something from the physical world, and try to give it value.
I don't agree with that, actually, Jose. And I think what the issue here is not that we need to get away from the idea of physical scarcity. It's just a lack of understanding of where that physical scarcity has actually gone in the crypto era. Where it's gone is in the mining paradigms. So we've got scarce assets, we got manpower to learn and set up mining rigs, and we have physical investment in mining chips, and then we have electrical power. These are 3 highly scarce resources that people give up in order to create cryptocurrencies. And that's the scarcity model upon which cryptos are based. Bitcoin scarcity is based on real world physical scarcity things. And I think that's a really important thing. You can't base a digital scarce asset on just the fact that you made 10 of them you can, but you're going to have the game theory will fall apart because people just won't see anything valuable in that. If people are giving up something genuinely scarce, then you'll be able to reflect that with a scarce token.
The problem with that is, though, the only real scarcity at the end of the day is time, because in 20, 30 years, you're basically going to have infinite energy. you're not gonna have to worry about energy. So energy is not gonna be valuable at all.
Right.
So the only thing that you're gonna really have left is time, right? So the time, and then like humans aren't even gonna be. I mean, humans don't really do it. It's just machines that mine all day, and it's just time, and it's just literally computing power that is the one thing that's essentially time and computing power, because there's really there'll be no man labor involved, really.
Well, we're getting a little off the subject, I think.
Dude, it's not off the subject, because the cryptocurrency is the future, and the future is going to be fucking ridiculous.
Yeah, well, okay, I don't know if it's completely off the subject. I mean, it is related to this idea. I mean, the idea of money is a way to track scarcity. If you have a paradigm where scarcity is not present, you then have no need for money. So, but you're talking about time being scarce, the time, like, manpower, for example, or just being able to spend time on something. Yeah, you'll have, these everybody will have the same access to, say, free energy, but you'll have some way to track the time that was spent on something. And if time is still scarce, in other words, if time machines do not exist, which who knows, then you'll still right. If time isn't even scarce, if you literally have no scarcity at all, there will be no need for money.
Yeah. You're right. I mean, I believe that's going to happen too eventually.
I think so too.
I think essentially for now, the cryptocurrency is going to be like a transitional period.
Right, well, yeah. But it's based on It's a way to track scarcity, and it must therefore be based on scarcity, and is very much so. But I totally agree with you that going back a paradigm to metals is relatively stupid. And I understand if you're holding metals now speculatively, thinking that they'll still be scarce for until the asteroids are mined or whatever it is, and that's cool. Just like even though I don't see a technological advantage to the existence of the Ethereum network, that doesn't mean you can't make a bunch of money speculating on it like you did. That's great. Yeah. So I think that gold holders too should be very cognizant of the risks of holding a previously valuable monetary substance whose technological value is in question. Unlike silver, which has huge amounts of industrial uses, gold is very much being disintermediated in its industrial uses, and its industrial value is far, far lower than its monetary value. So and crypto is a direct threat to that monetary value.
Yeah. On top of the fact, I mean, obviously this is like 10 years probably down the road, but with the advent of private, space exploration and, basically space mining is happening. So they bring one asteroid down, bam, the value of gold is gone. I mean, because one asteroid can theoretically hold, more platinum and gold than it's in the entire Earth. So that's a risk that's coming on that people may not be, foreseeing. But like, that's the thing right now, like the technology in all sectors of industry, healthcare, finance, AI with autonomous vehicles. Right now with bots, like I literally work for a company. My day job is a company that creates bots that integrate with pretty much all kinds of enterprise applications, and basically you can offload your daily grind to these bots. So it's people. I think the majority of people don't understand what's about to happen in the next few years. Like
manufacturing, transportation, every industry is about to get
3D printing, of course.
Yeah. Manufacturing,
it's such a huge shift that's happened that people are not going to be ready. And I think a lot of those DAO token buyers and Bitcoin holders. And anyone who's listening to this show will be ready. Everyone else fails.
Very cool. We only have time left for one subject, so Gabriel, I'm going to let you choose. Should we rather talk about the new Thunder network or Bitcoin Core changing its overhauling its processes?
I'm going to definitely say the former.
Thunder. Thunder, yeah, for sure.
Thundercats.
The main reason is because I love that photo in the article. It's just, have you send the link there? Put the link here.
I'll paste it in here. Cool. I'm gonna paste this in. So we're on our final topic for the evening, which is discussing the Thunder network, payment channels that is going to be released from blockchain. And I think it's blockchain.info, right? That's the startup. Yeah, blockchain.info. So we'll discuss that real quick. And before we do, I just ask if everybody could share, go ahead and tweet out and Facebook out the show, the link at the top, and let everybody know we're talking Bitcoin here. We're welcoming anybody to come in and join. We just had Omar in here for a few minutes. He's been on the show just a couple times, just asking some questions, and we'd love to help him out. And we'd love to help out anybody who wants to come in and ask some questions. So let's talk about the Thunder Network in the Thunderdome. So this is I just found out about this today. So this is really cool. I read only a little bit about it, and it seems to be very similar to the Lightning Network with just a couple of nuance differences, but yet being a payment channel. Setup just like Lightning Network. So with the goal of increasing throughput for Bitcoin transactions exponentially. So Gabriel, if you could explain to us what the Thunder Network is, how it differs from Lightning, and when can we really start to see the effect of it being in, when can we start to see its effects in the ecosystem start to take place?
Wow, you're putting the whole question on me there. So, I am such a big Lightning Network enthusiast. Ever since I watched that first video by, Thaddeus Dryja and Joseph Poon in last February of last year. So it's been about 15 months. That just blew my mind. I hadn't been that excited about anything in the space since really getting Bitcoin in 2013 was when I kind of like, oh, what is this stuff, So it just blew me away, and I think the potential is totally incredible, and it's going to form one of the main blocks or one of the main components in Bitcoin's scaling into the future. And there's going to be a lot more because the concept of payment channels as a way to do instant and micro transactions is so massive. There are already at least two other very interesting, very efficient proposals, white papers. I don't know if they're going to get funded. It all depends, but there's been at least a couple more since Lightning Network, and who knows what is going to come down the pike or even be built sort of on top of Lightning. I don't know if that's possible to use it as a platform, but maybe. So we've got this great white paper, and we've got we've got Blockstream doing a lot of building of the reference implementation of the Lightning Network. What Lightning Network is really a hub and spoke model for payment channels that are set up, and you basically make a single Bitcoin transaction to open a channel, and then you've got basically infinite throughput there. You call it infinite, but it's really like sending emails. So it's 1 to 2 seconds, and you can send a small amount or big amount as you want, and you would need to do another transaction on the blockchain in order to close the channel. So if you set those channels up in a hub and spoke model, then you can connect to anybody else without having to open a channel with them directly. You have channel open A to B, B to C, C to D, and then D to E. So then you've got A to E, and then you can set up even more. So it's a wonderful opportunity to distribute trust out there. There are still some components that need to be built, but none of them are depend on things that haven't been invented yet. They do depend on 2 or 3 very important additions to the Bitcoin protocol, to the base protocol, that absolutely have to happen before large payment channel structures can be viable. And one of them, for example, is check lock time verify. So basically you are saying you're making a transaction that says, after this transaction posts, it can't be spent until a year later or a week later or whatever. So it's like a I think that's the one that I named, but it's a relative time time lock.
That just got added, right, into the latest version.
It is, yeah, it's actually in review right now. So it just got merged into the next version. So I'm pretty sure, from what I can tell on the timing, we're looking at the next release of the Bitcoin Core client, the 0.13, I believe it's going to be, is going to have that. And then there's also the bug of transaction malleability, which will be repaired by the large project of segregated witness, which has also been merged and is also being tested. If I'm not, no, that hasn't been merged yet. That is No, it has. It has. It's been merged in, and they're
been
looking at.
Yeah, running on the test net for a year.
Right. It hasn't been merged yet. It is
Okay.
the code is being combed over and looked at before it gets merged in. So that's probably going to be the next version after that, maybe 13.1 or 14. So once those are live is when really all these things become viable, and everyone expects that those will be going live this summer, or September, October,
This
later.
year.
This year for sure. And Blockstream, with their proposal for Lightning Network, claims that they'll be done this fall. So it's great timing. Meanwhile, Blockchain, which is their website, blockchain.info, is an online wallet. And also, of course, excellent block explorer, the first big block explorer,
Both real quick, both blockchain.info and Blockstream have pretty large amounts of funding, I believe.
Yeah, they have
in the tens of millions.
Yeah, they've got enough to certainly keep going through the year. So blockchain has built what seems like a semi-centralized implementation of Lightning Network that they call Thunder Network, which it's basically a way for them to create a business model based on this new technology. And I think it's admirable that they're doing it. I mean, you have to have centralization in order to maximize profit. So it's very interesting. So they're basically, this would be if you want to outsource. What I think is that blockchain is vying to be the first big Lightning hub operator. So they're going to have a number of hubs, and they're going to make it as easy as possible. They're going to do some UX work. So while Blockstream is creating the base software that any hub will be able to use, which is actually a larger project, Blockchain's making an implementation just for them so that they can run their hubs, which they're calling nodes in this article, but I'm pretty sure they mean hubs. And so, I think basically Blockchain is going out there to be the first big mover in the Lightning space, because the hubs are actually profitable. Hubs will have to lay down cash in order to open up channels. They'll have to lay down Bitcoin. They'll have to invest Bitcoin, and then they make tiny amounts of fees because of that. So I think it's great. It might come to nothing and totally have wasted their time, but if anything, people will be able to look at the UX work they've done, and possibly if they open source any of their code, people will be able to utilize maybe chunks of that, even if the whole project fails. So that's kind of my understanding of the Thunder Network.
So let me ask you this, Gabriel. Have any thought on what people are saying about how Lightning hubs are going to more than likely require money transmitter licenses, or Thunder hubs too? Have you looked into that at all, and what do you think about that?
I haven't looked into it.
Because that was a lot of the big blockers, or the big blockers defense to Lightning is a lot. A lot of them say that Lightning is going to be a dead end because it's just going to be regulated to death, and it's going to require a money transmitter's license for every single hub.
Yeah, I mean, who knows? Here they could be very much be right. I mean, look at governments; they try to get their claws into whatever they can. It's just the biggest mafia, and so the mafias aren't going to say, "Oh, I'm not going to go to the arborists to do a protection racket." They're just going to do whatever they have the capacity to go after. They're going to try to go after. Of course, it's going to be really hard to just like if they were to make Bitcoin illegal, it's totally impossible to enforce. I mean, they would have a hell of a time enforcing it.
I was gonna say, how could they enforce every single hub, every single hub in the world to require a money transmitter license? Or maybe I guess they could say only hubs based in Vegas. But then how could they know? Because doesn't it go through the Tor network?
Yeah. Well, Tor, they happen to have built Tor into their hubs.
Yeah, Thunder did.
Yeah, exactly. So I mean, it certainly is possible to hide stuff and keep anonymity.
Interesting.
You can utilize hubs. I'm getting killed with this website here. I need to close it. CoinDesk is opening windows on me. First of all, that's not an argument against the viability of the Lightning Network.
Sure.
All you have to do is jurisdictional, what do you call it? Arbitrage, and you move your business somewhere else. You've got your servers anywhere. It's just like trying to stop Bitcoin mining by making it illegal. It's never going to work. So that's not going to work. And then they're not going to be going after regular end users because that's too inefficient. There's no way they'll go after all of them with their people and try to detect your use of the Lightning Network. So it's just the very weak argument. But yeah, I mean, certainly they might. It's as a risk, certainly it could exist someday.
Okay, very interesting. Jose, anything to add in here about the Thunder or Lightning Network?
I'm really not familiar with it, but if Gabriel says it's cool, I believe him.
Exactly. If Gabriel says it's cool, you freaking know it's cool. So
yeah, I agree with that actually.
Any more hands?
Then that means it's cool. So very cool. Yeah, we need more hands to give to Gabriel. Seriously, we need to click on Gabriel, and give him hands up. So very cool. Well, that was the last topic that I had for the evening. So unless you guys
wait, I want to see what this guy. What's his name? He has a weird name, but I like what he's been saying here. I'm going to read it out here.
Yeah.
So
please.
It completely removes the counterparty risk of the exchange. Oh wait, no, I got to go back further.
He said a lot.
I think people don't understand. I don't think people understand how important off-chain scaling is for exchanges. Instead of having to deposit your Bitcoin to an exchange, you just make a channel which cannot steal your funds. It takes forever, so it completely removes the counterparty risk of the exchange running away with the funds. Right? These centralized exchanges are definitely going to be extinct, but allows you to trade using instantaneous payments. And since exchanges can link to each other, they can route. I don't understand why Coinbase isn't putting more effort into off-chain like Lightning. I think it's because maybe they're dumb, from what I can tell. And it would benefit them the most. SegWit has not been merged, right? There's a separate testnet for SegWit. It's open source, right? Like I said, government doesn't require current Bitcoin node operators to be AML KYC. Same with running an Electrum service. I don't think they enforce AML KYC in running a Lightning node. So yeah, I mean, they don't now, but they might try to in the future. Lightning nodes can certainly read the transactions coming through because they're actually the ones that are signing them back and forth. It's basically a daisy chain signing procedure where they do digital signature, and it comes all the way back, and you can send it back and forth along those. And so the hubs are actually getting a lot of information. You'll be able to track a lot of pseudonymous transaction info. That's another way that hubs can monetize their investment into the payment channels that they're sponsoring. They'll be able to sell off possibly the what's it called? The information on the transactions for surveillance purposes or for marketing purposes. I don't think that business model will last very long because of ring signatures and all the new fungibility and privacy anonymity features that will be grafted onto Bitcoin.
And given the choice, what are consumers going to choose, right? I mean, if they have a big, awesome, flashy marketing advertisement of this thing that does complete anonymity, and then this one that doesn't, they're gonna look. Okay, these are both flashy, but one of them, the government can't read everything I say. So,
right.
I think it's going to be pretty
I don't know
easy.
because people haven't, because of UX issues, people haven't made that choice recently. So recent history, argues against your point. But it doesn't once
temporarily.
Something has,
only temporarily, yeah.
Right, yeah. Once something is launched, it's not going to cost the hub operator anymore to click and install the latest ring signature update or whatever. If it's built into if anonymity features are built into Bitcoin, and if they are, then then it'll be great. It's a free people who are willing to pay less because they're monetizing by being surveilled. Are going to pay less for those hubs, and people who are willing to pay more will pay. It's a market rate for anonymity, no problem.
It's the market. Some people care, some people don't, and the market will decide, what succeeds. So
and I think that's wonderful.
Yeah, very cool. Well, very cool show. Thanks so much, guys. I had a great time. We covered a pretty good amount of topics. As always, Gabriel took us through some of the complex understandings and technical things we can't really understand by ourselves. So thanks so much, Gabriel. It definitely opened my eyes a lot, and hopefully we can help more people that want to come in here and learn about Bitcoin. We definitely ask anybody who's curious to come in, and we even ask people who are against Bitcoin, to come in here and make your case. I really love trying to convince the old statists, about how cryptocurrency is going to take over the world. So definitely, if you got something against Bitcoin and want to talk about it, come in as well. We try to welcome everybody. So thanks again, guys, for joining us. We're going to be back here again next Monday at 8 p.m. So Gabriel, the Monday after this, we every other Monday at 8 p.m. So Gabriel, can you tell us where we can find you, please?
On Twitter at Gabriel Divine.
Yep. And Jose, where can we find you?
You can find me on Twitter at Trupix.
Spell that real quick.
Trupix.
Oh, there you go. And of course, you guys can always find me at theonevortex. And we upload the show to the World Crypto Network, and we're always hanging out in the World Crypto Network Slack chat. So definitely feel free to hit us up there as well. And hopefully we will talk to you guys soon. We'll be back again Monday after next. So please join us. So until next time, Gabriel, why don't you give us one of those?
Bye-bye.
Thanks, guys.
Baby.
Bye-bye.